By the end of 2026, most investors will lose money, not because the market crashed, not because opportunities disappeared, but because they made predictable, avoidable mistakes. In fact, the biggest risk in 2026 isn't the market, it's how people are reacting to it. In this video, we're breaking down the 3 critical mistakes that will cause 99% of investors to fail, and the 1 disciplined strategy that can put you in the top 1%. Welcome back. If you're serious about building real wealth in the age of AI, volatility, and rapid market shifts. This is not optional knowledge. This isn't hype. This is strategy. Let's get into it. Mistake number 1. Chasing hype instead of value. In every market cycle, there's one pattern that repeats over and over again. Retail investors buy after the hype, not before it. By the time a stock, crypto, or AI company is trending on social media, the smart money is already taking profits. We saw this with meme stocks, crypto surges, AI stock spikes in 2023 to 2025. Data tells the story. Studies consistently show that the average retail investor underperforms the market by 3 to 5% annually, largely due to poor timing and emotional decisions. What's happening in 2026? Hype cycles are getting shorter and more intense. What used to take months now happens in weeks, sometimes days. The danger: buying at peak valuations, holding during sharp corrections, selling in panic. Bottom line, if your investment strategy is based on what's trending, you're already too late. Mistake number 2, ignoring AI-driven volatility. Here's something most investors still don't fully understand. AI isn't just creating opportunities. It's increasing market volatility. Why? Because algorithms now trade faster than humans, react instantly to news and data, amplify price movements. This creates violent swings in asset prices. Example behavior we're seeing: stocks jumping 10 to 20% in days, sudden corrections triggered by AI-driven trading, entire sectors rotating rapidly. Key data point: market volatility indexes have shown increased short-term spikes in AI-heavy sectors compared to traditional industries. What most investors do wrong: they assume long-term logic applies to short-term chaos. They hold blindly or panic sell at the worst possible moment. Reality: in 2026, volatility is no longer an exception. It's the new normal. If you're not prepared for it, it will destroy your returns. Mistake number 3, poor risk management. This is the silent killer of portfolios. Not bad picks, not bad timing, bad risk management. Most investors overallocate into a single trend, fail to set exit strategies, ignore downside protection, and when the market turns, they don't just lose money, they lose control. Let's talk numbers. A 50% loss requires a 100% gain just to break even. That's the math most people ignore. In 2026, this gets worse because AI-driven assets move faster, corrections are sharper, recovery timelines are unpredictable. What separates winners from losers? Not how much they make when they're right, but how much they protect when they're wrong. So how do you avoid becoming part of the 99%? You don't need luck, you need a system. Let's call it the Wealth Pulse approach, a disciplined, data-driven strategy built for modern markets. It's based on 3 principles. 1, signal over noise. Ignore hype cycles, focus on data. Fundamentals and long-term trends. Ask, is this asset solving a real problem? Is growth sustainable? If not, you don't invest. 2, volatility awareness. Instead of fearing volatility, you plan for it. Use position sizing, scale in and out of trades, expect swings, don't react emotionally. Volatility becomes a tool, not a threat. 3, risk first, profit second. Every decision starts with what's my downside. Set stop-loss strategies. Diversify intelligently. Never bet everything on one idea, because staying in the game is how you win. Here's the truth. In 2026, opportunities will be everywhere, but so will mistakes. The investors who fail will chase hype, ignore volatility, mismanage risk. The ones who win will be disciplined, strategic, and patient. The gap between the two is getting wider. If you want to be in the 1%, start thinking differently today. Hit like, subscribe, and drop a comment. Which mistake do you see most investors making right now? And if you want a deeper breakdown of the Wealth Pulse strategy, that's coming in the next video.